This is the start of chapter 12 in accounting 212, and we only have one more chapter after this, chapter 13. These are both great chapters. I don't really, if you really get to know me, I don't really enjoy reading accounting. I don't enjoy reading any textbook for that matter. But if there's a pragmatic chapter that really gives you some good information, this chapter should really be called common sense decision making. It teaches you some great common sense in approaching any decision in life. I don't care if you're not a business major or an accounting major or a finance major. Any major could read this chapter and get something out of it. This is just very good common sense. But like everything, as you move into life, your decision making gets more complex. The variables become a greater number of variables. The dollars you're dealing with are a bigger, larger amount of dollars. There's more cash flows. So this kind of chapter is really helpful because it definitely takes us to more complex decision making. I beg you to read the notes and the chapter. It's a really good chapter, and the notes are really good. I can't really, my notes, again, here they are, but they're posted on Moodle, and I think they're excellent. I can't lecture as good as my notes, but I will give you an overview. The premise of this chapter is simply anything that's the same between two choices is irrelevant. If you're looking at 2 or 3 or 4 choices, it doesn't matter, and you found some piece of information that's the same, it will be confounding information that is irrelevant. And you would not believe how easy it is to let numbers confound you when they do not make any difference to the overall decision. Numbers that are sunk, costs that are in the past, you can't do anything about. We always want to focus on future dollars, future costs, future revenues, and we want to focus on those future revenues and costs that are different between alternatives. And certainly in real life, you want to take into account qualitative factors. We're going to focus on quantitative factors in this chapter, but without a doubt, when you get done with any kind of analysis, you want to look at, again, factors that you consider non-quantifiable, but they still, in your mind, make a difference. Certainly location might make a difference if you were dealing with real estate. Certainly, other factors that, again, maybe the amount of pollution that something produces, the environmental effects of a machine or of a process. Again, those environmental impacts might, even though they might not be money, they might be something that is very qualitative to you. So those are important. But anyway, I want to get into the chapter right away. We are going to work a series of problems. It's chapter 12. We're going to work 12.1, 12.2, 12.3, 12.4, 12.5, 12.6, and 12.7. 12.1 is an excellent general introduction, just to get us to think about, what are, and the key is, what is a relevant cost and what is an irrelevant cost. That's what we're really going to be. Anytime it's irrelevant, throw it out of your decision making. Many times an irrelevant cost can confound you, and you'll make the wrong decision. You'll see how easy that is to do when we get into these problems. We're going to do exercise 12.2. Should we drop an unprofitable product line? 12.3 will be, should we make this or buy it? You wouldn't believe how many times in my life I have had clients that are working on these two decisions. And again, in all honesty, sometimes the client was going to make an erroneous decision, a poor decision, because again, there's costs that can confound you. Special order. In other words, should we take a special one-time order? What will be profitable or unprofitable? Volume trade-off. Volume trade-off is, I don't really remember that problem, to tell you the truth. What is the volume trade-off? I'm going to guess if we should make more or make less, but I don't really remember 12.5. Constrained resource, that one I remember. In other words, everything's relative. If you say this is my most profitable product, and this other product is less profitable, that may not be true at all. If you have something about the more profitable product that is constrained, what I mean is, what if this product takes 2 pounds of oil, and you only have a limited amount of oil, and this product only takes 1 pound of oil to make? Well, it may be that you can make double the money with something that only takes 1 pound of oil. So we're going to look at, if you have a constrained resource, everything changes as to what's most profitable. Sell or process further. should, again, if we go ahead and process, and this gets into, again, a lot of times even things like processing cows and pigs, even though I don't like that, but it's a tough topic. But should we go ahead and process the cow further and make further meat products out of it, or further, meat products out of a pig? Another thing is oil. Should we take oil and process it further? Do we want to get it all the way to change it into gases and Vaseline, and again, motor oil and kerosene, or again, can we just sell the oil in a less refined state and make enough money? Again, always we'll look at this. Should we sell something the way it is or process it further? What's going to make us money? Anyway, these are all excellent problems, and remember, our focus is going to be on trying to look at 2 alternatives or 3 alternatives and say, again, what is the best costs and variables to focus on to make the best decision? It is a wonderful chapter, and I guarantee you, I think you'll be a much better person from studying this, and I don't care what your major is. By the way, if you notice, I cut my nose. I'm sure a lot of you are thinking, I bet he did that with a boomerang. You're right. That's exactly what happened. I know I warned you about that in an earlier video, not to play with boomerangs. Well, I went and threw a boomerang, I ran from it, and as I turned around, boom, it got me. I was lucky to survive that. There's no place for boomerangs in our society. They're dangerous. Now I've learned that. Okay, let's get on to the chapter. All right, we're working exercise 12.1. Again, this is course 212. And 12.1 is just a general introduction problem to the chapter. I do want you to know that the way I've displayed this, I have to cut off a little bit, but again, it's still pretty readable. 12.1 is a general problem. What they're going to ask you to do is to apply the concept of, and here's the concepts. Look at a series, some decisions. We're going to give you a series of costs and factors. Try and go in there and remove what's irrelevant to the decision and keep what's relevant. Now remember, what's relevant are usually costs that differ between alternatives. Let me say that again. Future costs that differ between alternatives. Do you see that really past costs can't differ? If there are past costs, they've already been incurred, they're sunk. Well, they can be different, they can't be changed. So we want to focus on future costs that differ between alternatives. We can also focus on future opportunity costs. We can focus on, many times in the future, we'll call it an incremental cost or an incremental revenue. But those are what we're trying to isolate. Those are the things that will lead us to good decisions. In this case, we're really not going to do anything with them. We're just going to try and identify. We're going to train our minds to, in this problem, to begin to think of what is unimportant, what should I throw out, and what is important. And I really shouldn't use those words. I should say what's relevant to the decision and what's irrelevant. In this problem, we have a company, and what is their name? I guess it's called, I don't know what the name of the company is. I think it's called Svan and AB. It's a Swedish manufacturer. Oh, they make yachts. They make yachts. Anyway, and they eat at a buffet, and they love to eat a fish fillet. Anyway, yachts. So this company is making yachts, and the company has assembled the information shown below, and they're going to make 2 independent decisions. In one case, in case A, now these are separate. I put case A over here, and I put case B over on the other side of the board. But case A, they're simply thinking they have no idle capacity. What that means is they're running their plant to maximum. Now I'll say this again, just because you're making as much as you can. In other words, just because a plant, if you visit a plant and they say to you, we're making all the yachts, those are boats, by the way, in case you don't know, that's a boat. It's just an expensive boat. But anyway, if they're making boats, they're making all the boats they can. But that doesn't mean that if you go on the plant that everybody's busy. It really can mean that only a few people are busy all day because they're the people that, again, have the most constrained resource. But you could walk around the plant and see quite a few people that say, well, I'm not busy. Again, everybody else is working 100%, or not everybody, but a few people are working to 100%. But many people won't be working to 100%. It means that, again, you're producing all you can, but it doesn't mean that everybody in the plant is working 100% of the day. Each workstation can be different. It depends, again, the workstation that's going to be the busiest is the one that uses the most time to make a yacht. So, again, that means that they can't make any more boats, but it doesn't mean that everybody's busy. It means in fact, what I'm really trying to get at is you go out in that plant, you find the busiest area, and you focus on that, and you try and increase the throughput, decrease the time it takes. That's what I'm saying, is that somewhere out in that plant, you've got a bottleneck, you've got a problem. That's what you focus on. The rest of the plant may have plenty of capacity. Anyway, the company chronically has no idle capacity, and they have an old model B100. And again, let's say B100 is actually a machining center. Let's actually say that's where they do all the fabrication for the engine. Let's again say they fabricate, build the engine in a machining center. I mean, that's much bigger than one machine. A series of machines and again, processing and fabrication that builds the engines on the yachts. And again, management is considering purchase a model B300, so they're going to add another one to it, a B300. The machine to use in addition to the company's B100. So they got a B100 machining center with all these machines, fabricators, welders, again, let's again say extrusion machines, lathes, all of it puts together the engines and assembles the engines for the yacht. The old model B100 will continue to be used. Can you see that it got cut off? Will continue to be used as before, but the new Model 300 will be used to expand. Again, we're saying we're going to add what? Extra production capacity. Do you see this is a constraint? And we're trying to say, well, what can we do to, again, push more through? We can make more yachts if we, again, have another facility to build engines. This will increase the company's production and sales, so it will increase. That's a key element. This will increase the company's production and sales. That's really great because we'll sell more and we'll make more money. The increase in volume will be large enough to require an increase in fixed selling expenses. That's probably going to be salesmen and their salaries and saleswomen and their salaries and forms that they have to fill out and phone calls and travel and in general administrative overhead. That's the same thing, probably the administration who sells the yachts and markets them helps on that. I would say this is a bit phony because it says there's not going to be an increase in fixed overhead. That's overhead, but there would be in real life. That's wrong. You see, if you buy a new machine, you're going to have more what? Depreciation. But let's go ahead and run with this problem just the way it is. And let's go ahead. There's not going to be more depreciation. That is, again, wrong. There would be if you buy another machine, it's going to depreciate. But they do say we're going to have to pay our salesmen more and general administration more because they're going to be selling more. They're going to need a bigger sales staff. They're going to need more paper, more, I guess, advertising again to get this out. And okay, now what they want us to do is they're going to give us a series of costs, and they say down here required. They want us to look at case A, which again, I've written case A over here. They're going to buy an extra machine, B3100, that's more capacity, and they're going to give us a series of costs. And we're supposed to identify them as relevant or irrelevant. All right? And let me go ahead and focus this down. We've got to get to those items. Okay. Here they are. Doggone it. Get rid of all this. And here they are. All right, let's take a look. Sales revenue. Now again, think about this, case A. And really, I kind of would like to say, okay, really the decision here is, you got to keep this in mind. Case A, we're thinking about what? If we just have one B100 machine, and the decision is, should we buy, again, the alternative, our alternative is we buy a B300. So we're really looking at two alternatives. Just keep this and keep things going the way they are, or do we buy a B300? This really is a decision. They're really saying, should we again just stay with one B100 and be happy, or should we buy a B300? Again, the alternatives are stay the way we are or buy the B300. And here's what they're saying to you. Now you can put a number. Any one of these you can say you can just put $1 in, but you put $10 into each one of these if you like money. But in general, they say sales revenue. Let's not really do that. But sales revenue. Now I want you to think about this. If we just keep the old B100, well, we're just going to keep selling the same amount, right? Again, we're just going to keep selling the same amount. So it makes sense that, again, if we buy the 300, we're going to sell more. Remember they said that. We'll sell more of these. We're going to sell more. So again, this is going to be, A is going to be relevant. Relevant. we will sell more. How about again, if we go ahead and switch over to buy B300, if we go from just having B100 to B300, we're going to have to buy incremental materials because we're going to be making more. We're going to have to hire and pay more people, or we're going to have to pay people overtime. And variable manufacturing overhead, remember what I always told you? Just think of that as, again, electricity. The most of that is electricity. Some of it's nuts, bolts, that's bolts, glue, small stuff. Nuts, bolts, glue, maybe cleaner. Small stuff, that's all your variable manufacturing. You know, they're not direct materials, but nuts and bolts, small stuff, and then electricity. But variable manufacturing, well, if we're going to make more, we're going to have more electricity. We're going to use more nuts and bolts and glues and cleaners as we do what? As we make more of these boats. So these are all relevant. They're all going to change. These are all relevant. They're going to change. The future cost will change. You're going to have more revenues, more materials, more labor. And again, when I say that, I mean when you compare just the old B100, keep it, or the alternative is buy B300. You're going to keep both. Remember, you're just going to have an extra machine. So you'll have, in this case, you'll have both. Alternative 2 is just keep the 100 or have both the 300 and the 100. All right, all these are going to change. How about depreciation? Model B100 machine, is that relevant? Well, remember, depreciation is always, I want you guys to think depreciation is actually, in this class, the answer for that will always be that it is irrelevant. Let's just go over there and put that down. And you might say, they keep having trouble spelling things. No, that's not the one I want either. This is the one. Yeah, depreciation is irrelevant. Let's look at F. Book value. Well, book value is irrelevant. I'll talk about these in a second. Disposal value, that's irrelevant. I'll talk about these in a second. Market value, let's wait on that. Let's try and go through these three. All right, in real life, depreciation is actually relevant. But you guys are in 212, and 212 is an introductory class. And you're in an introductory book. Depreciation, if you really think about it, depreciation it's not real. Remember, it is real, but it's not a cash flow. So if I go ahead and I have B100 and I buy B300, I'm going to have more depreciation without a doubt. But depreciation is a calculation. It's a number that we calculate. It's actually not real dollars. And yet, bizarrely enough, it really is real. Depreciation, we agree that this data video projector is depreciation. The carpet as I walk on it is depreciation. But I'm not spending money instantaneously. It's one of those oddballs that if we really say, well, is this a cash flow? It is not. If you look at the two decisions between, again, the depreciation, it doesn't matter, model B100, it doesn't matter if they say model B300, whatever. The depreciation actually will change between these alternatives. And I know you'd say, well, if it changes, then it must be relevant. No, because depreciation is not a real cash flow. It's a computed number. So therefore, it's going to be irrelevant. Now, it's going to be irrelevant there, and also the book value of model B100 machine. Well, book value, I don't know if you remember what it is, but it's the cost minus accumulated depreciation. Well, that's not going to change. Let's just say the cost of this is $1 million and the accumulated depreciation is $700,000. That doesn't change between whether I buy the new or keep the old, because you see, no matter what, I'm going to keep the old. The book value won't change. Whether I just keep the old or whether I buy the new, the book value of model B100 doesn't change. So that's irrelevant. And then the disposal, what did they say? What's G, did I say? Disposal value of model B100. Now you might say, well, hold it, isn't that relevant? But hold it, think about what they proposed here. They're not going to dispose of it. They told you in this problem, we're not going to dispose of it. So if you look at your two alternatives, even if I tell you that I can sell that machine for $100,000, do you see, again, it doesn't matter. I can sell the machine for $100,000, but I'm not. I'm going to keep it. Or I'm going to keep it and buy the B300. Either way, the disposal value is $100,000 under both alternatives. Under one alternative, I keep B100. Under another alternative, I keep B100 and buy B300, but I still got B100. So again, it's irrelevant. Now, let me give you a dose of real life, as if you're in a fantasy right now. This is all a bad dream. Anyway, what do we got here? Why did I say depreciation? Depreciation is, for this class, depreciation, you can always say on the test and everything, irrelevant. But in real life, it can be relevant. And I'll tell you why. Depreciation is tax deductible. And if you can deduct it on your tax return, you can save real money. So if you take an upper level accounting course, you will find out that what I told you is a downright fib. Again, depreciation is irrelevant because it really is a calculated number. But it really does have cash implications. It has cash implications if you put it on your tax return. But you don't have to worry about that in a 212 class. But if you take advanced courses in accounting, you'll find out that, guess what? More depreciation means what? Savings in taxes. Depreciation is deductible. You don't have to know that for the test. But anyway, I don't want to send you off with a false impression. You know, you might use this actually. This could be useful. You never know. H. Market value of model. Now this is market value. This isn't book value. This is market value. Market value is what it costs. Book is a calculated number. Market value is what you can sell your car for. So let's say model B300 costs $5 million. Now think about this. You have two alternatives. You just keep the B100 or you spend $5 million on 300. You see they're different between the alternatives. If you just keep model B100, you won't spend the $5 million. If you buy the new machine, you'll spend $5 million. So this one's relevant. So we go back and see, yeah, the cost of that machine. I really wish, though, the author would have just said, you know, the cost of the new machine. He says market value, but that's good that you learn new words. Fixed manufacturing overhead. This is the one that your author actually said earlier. You have to go back up there in the problem, but he specifically said that fixed manufacturing overhead would not change. If we buy B300, he said in the prelude or whatever it is there, or in the header, he said fixed cost will not change. That's dead wrong, but we're not going to refute the author. So again, if he tells you, or she, in this case it is a he. No, there's actually a she in the book too. Anyway, there's 3 authors I think that do this book. Anyway, I think one of them is female. But anyway, let's say they. If they tell you that fixed overhead is going to stay the same, then guess what we're going to say here? Even though it really won't in real life, we say it's irrelevant. Why? Because they said it's not. If you have B100, it'll stay the same as if you go ahead and buy B300. So anyway, these two, he said in the header, he gave specific instructions that these two would change. Now in real life, they probably would. Think about it. If you sell more yachts, you're going to have to give more commissions. And if you sell more yachts, you're going to have more bills going out. You're going to have more administrative expenses. You're going to have more insurance probably on those. And I don't know, registration and what do they call it, statements of origin. All kinds of paperwork with that. So J and K probably would go up to the increased sales. So I'll say J and K are relevant. In other words, if we buy B300, we'll have more of these than if we just kept it. There'll be a change in the future. And L, general administrative overhead. General administrative overhead, I thought he said that was going to go up too. So that's going to be relevant. Let's go back and check that just to make sure. Let's go back up to that header. Let's just look at that. What's he say? It's up here. This will increase the volume. We've been large enough to require fixed selling expenses. Fixed selling expenses and, what does it say? Require incremental fixed selling expenses and general administrative overhead. All right? He out now tells you that fixed selling expenses and general administrative overhead will go up. Which ones were those? I think those were actually fixed selling and general administrative overhead. That was fixed selling and general, that was K and L. He never told us about variable. He never said in there. I don't know, he doesn't make a specific reference, but I'm going to go ahead and say you cannot sell more boats without having variable selling going up, because I've never heard of a boat sales place or a car sales place that doesn't give commissions. So if you sell more boats, you're going to have more variable selling expense, so we're going to go with relevant on that too. All right, give me a second and I'll switch over to the second part of the problem, case B. All right, case B, same exercise, exercise 12.1, case B. Let's read case B. This is a totally separate case. These cases are mutually exclusive, no relationship. Well, there's a little bit of relationship. Well, they got an old model B100, as we said. It's a machine center. It makes all the engines for the yachts. It makes the engines, and it's a very expensive machine center. Machine center means it has multiple machines and multiple processes. And there's multiple men and women working on those machines. It's a very big center. It's not the company's constraint, again, but the management is considering replacing it with a new model, B300. So we're still doing the same thing. We've got B300 and B100. But this time, there's no constraint. They can make all the engines they need, but they want to do it because of savings in direct materials. Direct materials, the new machine. The model B100 machine would be sold, so we're going to get rid of it. This is a replacement. This change would have no effect on production or sales. We're going to sell the same amount of yachts, other than some savings in direct materials cost due to less waste. We didn't used to call that waste. What did we call it? I think we called it scrap. But anyway, I guess it is synonymous. But anyway, when you have a machine center, any kind of machine, many times, think about it, if you make something, usually you're always producing scrap, pieces of iron, metal that fall off. And there's always a motivation to have less scrap. The more you can take any piece of metal and make something out of it, and again, have minimal scrap, well, that's a goal. Usually new machines always make something better. They can take a sheet of steel, or they can take an ingot of steel, or they can take plastic, whatever it is, and they can make more out of it and again, produce less scrap. Well, that's what they say, and they're thinking about saying, let's sell B100 and buy B100 and we'll save money. Now, I don't know, they haven't given us numbers, so we really won't be able to conclude whether this is good or bad. We're just trying to think about what costs are relevant and irrelevant. Let's scan up now and see what they give us. Oh, it's the same list. Same list. All right, over here, case B is, do we replace the machine? Remember, the machine is, do we replace B, this is, what do we got? The issue is B100, and we might replace it with B300. So there's the issue. And what will it do? If we do that, we'll reduce scrap. So this is a little different. Our alternative one is to just keep B100. Just keep B100. That's alternative one. Alternative two is, do we replace B100 with B300? It's good to put in your mind, what's A and B? What is it? I keep B100, that's one alternative, or I replace it with B300. Because you have to know your two alternatives clearly in your mind to say, well, now I know what's relevant between the two. All right, let's look. Sales revenue. Sales revenue, these are yachts. Was sales revenue in the future going to change? Do you remember, there's no change at all in this one. They're just going to swap out machines, but they're not going to sell more yachts. So again, this is, A is irrelevant. Direct materials, direct labor. Direct materials, hey, that's the one they said they were going to save money on. We know that one's relevant because we know that if we go to B300, it'll save materials. So B, we know that must be relevant. C, direct labor. They said the new machine would do nothing to direct labor. So direct labor won't change. That'll be irrelevant. Variable manufacturing overhead. Well, the only thing it really said it was going to save is probably materials. Now, I'll tell you the truth, in real life, I think this would be wrong. Usually, whenever you buy a new machine, that new machine will consume less power. It will usually be much more efficient. I suspect in real life, variable manufacturing overhead. Remember what that is? Electricity, nuts, bolts, screws, weld rod, the things, the side little materials that you use. The water, the coolant that goes through a machine, all those, it probably will save those. But the author didn't tell us that it would. In real life, I'm almost sure this would be relevant. The author said the only thing it was going to do is reduce materials. So we're going to go ahead and say that the electricity and all the nuts, bolts, screws that it might use in weld rod and all that's going to be the same, so this is irrelevant. That's really highly unlikely, but that's what the author says. You know, I have to make these things tie out to the answer manual. Otherwise, it would just drive you nuts. You go home and you find out I put a bunch of different answers up and you wonder why. Anyway, but the point is, you learn enough in college that you know what's right and wrong. You know, you can look at an answer manual and say, yeah, I think in real life that would change. You know, that's the point that you come out of the college and I think I might know more than, one of these foolish problems. Depreciation model B100, that's not, you remember what I told you, depreciation is always going to be irrelevant in this class. Book value B100. Well, that doesn't matter either. The book value, let's again say the book value is again the cost. Let's say it cost $1 million. And let's say you got $700,000 in depreciation. $1 million minus $700,000, the book value is $300,000, but that's just a calculated number. That's what they call book value. It's not the same as market value. Book value is just a number it's not going to change. And let me show you that. It's $300,000. The $300,000, if you keep it, it's $300,000. But if you sell it, it's still $300,000 because it's just a number on a piece of paper. It's not a cash flow. It's not anything real that we really say, well, you're going to get that money. So that book value is irrelevant. Do you see, again, actually, some of these might be confusing you. You see, it's very easy to confound your mind with information that really is just, all of these represent real numbers in real life. Disposal value of the B100 machine. That's relevant. Let's say you can sell it for $2, that's all. Well, if you can sell it for $2, if you keep it, that's $2 you won't get. If you sell it, you get the $2. So that's relevant, even if it's $2. The sales price, that's what's, again, the market value, the machine cost. Oops, I just said, oh, what's this one? The disposal value. Yeah, this one, again, the disposal value is relevant because if you don't dispose of it, you don't get the money. If you do dispose of it, you do get the money. Market value, the B100, let's say it costs $15 million for that new machine center. It might be more than that. It might be like, it might be a good 15, 20 million, I don't know. Market value, again, to make engines, be a big machining center. Let's say it's 15 million. Well, do you see that's relevant? Because if you keep the old B100 and don't buy the B300, well, you won't spend the 15 million. So in one case, it's zero. If you just keep the old B100, it's zero, but it's 15 million if you buy it. Fixed manufacturing overhead, variable selling expense, fixed selling expense in general. I think these are all irrelevant because they didn't say any of those would change. We're just swapping out a machine. Will the general administrative and overhead? No, that probably won't. Fixed selling expense? No, they're not going to sell anymore. Variable selling expense? That shouldn't change because they're not selling any more boats or yachts. Fixed manufacturing overhead in general. Yeah, I'm going to say that's irrelevant. It'll have more depreciation, but remember what we said about depreciation. Depreciation is irrelevant. So I, J, K, and L, I think those are all irrelevant. I hope that agrees with the answer manual. There you have it. Again, it's actually kind of hard in life to really look at things and say what's really relevant, what's not. This is just a warm-up, but it does get us thinking about how do we apply this. What we would do if we were really making this decision is all these things that are relevant, get them out. Just literally take a black marker and just scratch them out. Don't put them into your analysis. If anything, they'll throw your analysis off. If you do enough analysis in life, you'll really confirm that. You'll say, you know what, I've done this several different ways. And if I always eliminate these things that I think are irrelevant, you'll come out with the same answer. And you can do it many different ways, or not many, but several different ways. All right, we're going to go on to exercise 2 now and really start applying some of these concepts numerically. This is we're working on chapter 12, and we're just starting exercise 212. And this deals with dropping a product line. And again, we're talking about costing for making good decisions, but the biggest concept here is always when you're making a decision, try and eliminate irrelevant costs, sunk costs, costs that will confound you, that really will not make a decision clear. This is a good example. This is a company this is a Regal Cycle company, and they make three types of bikes and sell them. They make dirt bikes, mountain bikes, and racing bikes. And again, this is for, I think, this is for the past quarter. This is real data for the past quarter. So this is, again, I don't know what the past quarter is, but I know that's 3 months. Anyway, here's their sales, their variable manufacturing expenses, their contribution margin. Now remember, variable manufacturing, this is, again, going to have direct materials in it. It's going to have direct labor. It's going to have variable overhead. And it's going to have variable selling and administrative. That's usually salesmen's commissions. There's the contribution margin. Here's all the fixed expenses. Here's the net operating income. And it looks like in total the company's making $32,000. In dirt bikes it makes 70. By the way, these crossfoot, you know, all of these numbers, here's the total. They're cross-footing from right to left. But again, the dirt bikes made $17,000, the mountain bikes made $24,000, and the racing bikes lost $9,000. Obviously, this is the one that they're concerned with. Just let's do a percentage real quick. What is again, which is their biggest seller? 9 of 300,000. What is that? That's 30%. Let me see. Yeah, 3 times 3 is 9. 50% of 3 is 150. So mountain bikes are 50% of their sales. What is this? Well, I must have 50. That must be 20%. 2 times 3 is 6. So they're selling about 50% of their sales are mountain bikes. This is a decent seller. It's not terrible racing bikes, but they are losing money. It says management is concerned about the continued losses shown by the racing bikes. So they are concerned about this, the 9,000, and wants a recommendation as to whether or not the line, that product line, should it be discontinued. By the way, it says the special equipment used to make racing bikes has no resale value and does not wear out. Let's address that. All right, what are they talking about? It says the special equipment. All right, right, yes, there. That's what they're talking about. Depreciation of special equipment. Again, let's say that the racing bikes, the mountain bikes are probably made of aluminum. The dirt bikes are probably, I suspect they're made out of aluminum. But the racing bikes are made of carbon fiber. The carbon fiber, that's the depreciation of a special equipment. That piece of equipment only works and molds carbon fiber. What they're saying to you is, we have no other use for that machine. Let's read it again. The special equipment, the carbon fiber, let's again say the carbon fiber, tube, let's call it a fabricator, tube fabricator, it makes tubes. The special equipment used to produce racing bikes has no resale value. In other words, nobody wants to buy it from them and does not wear out. That's ridiculous. But what they're really saying is, they're saying that we can't sell it. If we drop racing bikes, it's just going to sit out in the plant. And guess what a machine does that sits out in the plant? It does nothing. But it does do one thing. It depreciates. Do you see what they're saying? Whether you keep making the racing bikes or whether you get rid of the racing bikes, you'll have that machine and it will sit out in that plant and depreciate. What kind of cost is it that doesn't change? Keep the racing bikes? Don't keep them. The machine stays there and keeps producing depreciation. Guess what that is? That's an irrelevant cost. It doesn't change between the alternatives. So again, you should be eyeballing that thing. Well, this one, it doesn't matter what you do, you can't get rid of it. All right? Now let's look at some of these other costs. Advertising, which is, again, we advertise for dirt bikes, mountain bikes, and racing bikes. That sounds, each one, if we drop the racing bikes, we'll quit advertising for them. Salaries of the product line managers, well, each one gets a salary. Let's say this woman or man, we will go ahead and lay them off. Again, they will not work for us anymore if we drop that line. So that cost sounds. Allocated common fixed costs, you know what that is? That's heat, light, utilities, and depreciation on the building. That's all stuff that, guess what? Think about it. Whether you make racing bikes or whether you don't make racing bikes, are you going to have to heat that plant? Are you going to have to light that plant? Are you going to have water in the plant? Are you going to depreciate the whole plant? You bet. Guess what's going to happen there? Allocated common fixed costs. In fact, let's see how they got that. It said they did it. There's an asterisk here. Asterisk. Allocated on the basis of sales dollars. All right. They took 60,000. 3 times 6 is 18. 5 times 6 is 30. 2 times 6 is 12. They just allocated them. They're really saying it costs $60,000 to heat and light, utilities, and again, water. What else? And depreciation on the plant. Now they say management is concerned about this. And let me read the first question to you. I'm not going to, if I want to keep the information up. And if I scroll down, I'll lose the problem. I don't want to do that. So I'm just going to read the first prop to you. It says, what is the financial advantage or disadvantage per quarter of discontinuing the racing bikes? Well, let me show you a way to do this. It's probably, it'll be the same answer as you get in the answer manual, but it's not like the answer manual. Here, remember I told you try and get rid of irrelevant costs? Let's go back, let's just take it, let's draw a line through anything that's irrelevant. And we're not talking about dirt or mountain, we're talking about racing bikes. Which of these costs is irrelevant? Now remember what the alternative is. You can keep the racing bikes, you keep them, you keep making them, or you drop them. All right? If there's any two of these numbers that don't change between keeping and dropping, that's your alternative. 1, you can keep them. 2, you can drop them. There's your alternatives. Anything that changes is relevant. Anything that doesn't change is irrelevant. Let's take a look. If you go ahead and drop these bikes, guess what this will be? You'll get no money. If you drop racing bikes, you will not hire them, you will not spend the money on materials, labor, electricity. What was that? Oh, variable selling expenses. You won't have those either. All of them go. So you will actually, this will go to 0. This, 27, is the result of these two, so it'll go to 0. What will happen to the advertising? That will go to 0. What will happen to depreciation of special equipment? Guess what? It's $8,000. Do you remember what we said? You can't get rid of that special equipment. All right, let's keep going. How about the product line manager's salary? You're going to lay that woman or that man off. How about heat, light, and utilities? Common fixed, they're going to stay. Now this is a subtotal and this is a total, so let's not do it. Which ones do you see that are the same? You can see that 8,000 is not relevant and 12,000 is irrelevant. Costs that don't change between alternatives are irrelevant. So what are we going to do about that? Let's just go back and take them out. If we take out, this is a -8, it's an expense, and this is a -12. They add up to a -20. Take those out, what do you get? If you take out a -20, you know what the -9 goes to? You take out a -20, the -9 turns into $11,000. That means that really what's happening, the bicycles are making $11,000. I guess we could do it another way, but yes, that's, like I said, remove the -8. Remember, that's what this is. This is an expense. Remove the -12. Do you see, you're not going to get rid of those. Whoops, yeah. You're not going to get rid of the 8 because if that machine's still depreciation. You're not going to get rid of the heat, light, and utilities. So take them out. What's really going to happen is, if you take those out, you're really making $11,000. What will happen on this one is your net income, you think that you, and I should say this tactfully, but I won't, you ignorantly think that if you drop the 9, if you drop this 9, this will change from 32, add 9 to it, and that'll be 41. You think, oh, if I drop the -9, this will go to 41, but it won't in real life. You know what it'll really do? It'll actually, the 32, you'll lose 11, and that will go to 21. Is that right? 32 minus 10. Yeah, that's right. You go down to 20. This will go to $21,000 in real life. So it asks, should we drop the product line? The advantage of the race. What is the financial advantage or disadvantage per quarter of dropping the racing bikes? Well, let's answer that. The financial advantage or disadvantage. A, the financial advantage. I got that thing. No, you can't see that side of the board, can you? Let's shift it to go over here. I don't know why I switched, but let's just go with that. The financial advantage of keeping racing bikes is $11,000 of profit. And it really is profit. So the financial advantage of keeping the racing bikes is $11,000 of profit. Let's do it one more way. Let's do it a different way. Let's do it this way. Let's erase this, and let's really put the numbers in a different way. If we drop, let's pretend there's no racing bikes, 60 will do what? You will lose $60,000. Let's do it this way. You will lose $60,000 in revenues. Do you see that's a change? What will happen to these expenses? You will not pay them anymore. If you don't have to pay expenses, that means that you will save $33,000. Let's not do these intermediate numbers. I guess, all right, I guess we can, 27,000. No, I just want to keep everything on a singular basis. Let's not do subtotals. Let's just look at everything singular. What's going to happen with advertising? I'm not going to advertise anymore. So guess what I'll do? I'll save $6,000. I'll lose $60,000 in revenue. I'll save $33,000 in all the materials and labor. I'll save $6,000 in advertising. Will I save any money on the depreciation of equipment? No, I will not. So in this case, there is no change there. There is no change. Let's look at this one. Salaries of product line managers. So in other words, this is going to be I'm actually saying if I drop, what is the change? I'm actually saying I want to write down any change. Remember what change is? Change is again relevant. Anything that doesn't change is irrelevant. This is a change, this is a change, this is a change. But this won't change. So let's just put a dash there. What's going to happen to salaries of product line managers? I'm going to save that money because I'm going to take that woman or that man and I'm going to lay him off. So I'm going to save that money. What's going to happen to the heat, light, and utilities? Nothing. Nothing. I'm going to put a dash there because nothing. 8 will stay 8. 12 will stay 12. Now then, if I go down here, let's not do a subtotal. Let's just go down and say, what is going to be the effect if I drop that line? These are all the changes. I'll lose 60. I'll gain 33. I'll gain 6. I'll gain 10. That's really what I'm going to have happen. Now, if we add that up, let's see what the change is going to be. Well, let's look at this. 33, that's 39, 49. 49 from 60, that is what? $11,000. And which way is it going? It's negative. Do you guys see that? It's negative. See, we're going to lose 60, but the gains, these are saved costs. Savings and costs, but they don't equal the loss of the revenue. So we still lose $11,000 of profit. Let's see what they ask us in B. B says, and I quote, should the production and sale of racing bikes be discontinued? Well, I think the answer to that's pretty obvious. Should the production and sale of racing bikes be discontinued? Well, I would say the answer to that is the production and sale of racing bikes should be continued. And then I'm going to put a semicolon. The production and sale of racing, I like to use positive instead of, a negative. The production and sale of racing bikes should, what would we have said it the other way? Should not be discontinued, should not be discontinued. I don't like that. It's confusing to me. My brain doesn't take that in easily. I just have to write it differently. The production and sale of racing bikes should be continued. And then colon, then I would say we, or we could say that meaning the company, we will retain an $11,000 profit. We will retain, let's just say not and, we will retain $11,000 in profit by keeping racing bikes in our product catalog. I don't know how to say it, but let's say that. The production and sale of racing bikes should be continued. We will retain $11,000 in profit by keeping racing bikes in our product catalog. Something like that. I really wouldn't write that. I'd probably put it, I'd reword it a little bit. It does ask us a Part C, and I don't know if I want to do Part C. It's a lot of work, and I don't think I'm going to put it on the test, but I'm going to show you anyway. Part C, it says, do a segment income statement. A segment income statement that would be more accurate and be better for decision making. Well, I'll show you how we'll do a segment income statement. Here's what we do. First of all, we'd eliminate all of this because we do not want to allocate these common fixed costs. You see, there's no point in it. So again, if the authors were sitting in the room right now, they would say, go ahead and if you want, take out the depreciation of special equipment. And again, do it. Just bring it right down here and put it down here with a 60, the 23. Again, you're not taking those dollars and taking them out of the income statement. That would be wrong. They're valid dollars to go in an income statement. But what you're doing is saying, I'm not going to allocate them because they really, again, the special equipment, it doesn't matter. It's going to, once I bought it, I can't get rid of it. So again, let's go ahead and just put it down here as a general cost. And then do you see again that the racing bikes now makes 3, 54, 35. Then again, this is 92. Then you pull out the 60, and then you get the same total as before, 32. Like I said, I don't think I'm going to have you do this on the test. By the way, you might be wondering, you might say, Chuck, I thought you said that this was going to make $11,000. Well, let's tie into that. It's this right here. Remember I said, and your author agrees with me, your author would say that 8,000 is irrelevant. Remember, we can't get rid of that extrusion. It was a carbon fiber extruder, and it worked on tubing for bicycles. Well, anyway, that extruder, you can't get rid of that depreciation. So you see, you just take it out. If you take out the 8 plus 3 is 11. So it does tie into our solution right there. 11 and 11. But your author decided, I think poorly, if you go to the answer manual, I wouldn't say that if he was here, to be honest with you, but because he's not here, or she, I would say I think your author should have pulled this out and shown this 23 right down here with the 60 right down there next to it, and then it would tie to the 11 that we came out with. But like I said, in life, you just have to be smart enough to look at something and figure it out. That's why you go to college, and that's why you learn all this, so that you don't sit there and be dumbfounded like I am most of the time. Anyway, that's exercise 12.2, and now we're going to do 12.3. Again, always focusing on what? Relevant and irrelevant cost and making a better decision. All right, let's shut down. Still in chapter 12, working exercise 12.3. This is counting to 12. This is a make or buy decision. Again, we're dealing with how to make decisions, but more specifically, how to get rid of irrelevant costs and focus on relevant costs. This is a very good problem. I've done a lot of these in real life, make or buy decisions. The issue is we make it. I've worked for many companies that make something. And the issue is somebody comes along and says, I can sell you that. In other words, do we buy it from whoever wants to sell it to us for cheaper? You wouldn't believe how many times you can make a very bad decision on that. Somebody will approach you and say, I can sell it to you for $10 cheaper, but you'll find out it really isn't $10 cheaper. Anyway, let's take a look at this. This is Troy Engines, and they manufacture a variety of engines for use in heavy equipment. This is cut off, but it says the company and $435 relating. This got cut off. But it says the company has always produced all the parts to make these engines, including all of the carburetors. If there's not one thing I don't love, it's a good carburetor. I'll tell you something, the smell of gas is a good smell in life. The smell of gasoline and oil, all those are good smells. That and napalm. Anyway, that's a bad joke. Outside the supplier has offered to sell, an outside supplier has offered to sell one type of carburetor to Troy for a cost of $35. Carburetor is the small unit, again, that goes on an engine, and it regulates the fuel that goes into the engine. It has things like floats in it, and it has a needle valve, and it has a pilot jet and a needle jet. But all these little jets allow fuel to flow through into the combustion chamber and explode in just the right ratio. And that's why you put that preservative in your gas, to keep those jets from getting clogged. But anyway, so they're making carburetors. A carburetor looks usually something like this. It kind of has a bowl on it. This is the drain. It usually has something bigger on this. It goes up, comes up like that. Usually this is a bowl on it. It has an orifice in there. It usually has some screws. to regulate the airflow and the fuel mixture for idle. But that's what a carburetor, by the way, it's a little smaller than that. For cost, to evaluate this, Troy Engines has gathered the following information relating to the cost of this carburetor. And this carburetor, again, they say here's what it costs to make a carburetor. So this is what it makes. It takes $14 of materials. Can you see it? They're usually made, most carburetors are made of aluminum. They could be made of stamped steel, but yeah, they're usually made of part aluminum, part steel. The bowl's usually steel. That's the bowl. Anyway, direct materials, $14 for this aluminum, and by the way, there's brass in there too, brass fittings. Direct labor, I don't know, $10 to make one of these. Variable overhead, remember that's mostly electricity. It could be small stuff like some cleaner. Every time they put a carb on, they have to clean it a little bit right before to blow out any residue, any of the manufacturing residue or any chips or anything that are in there from manufacturing. So some cleaner, and it might actually have a few screws in there, real small screws that are cheap. Remember, variable manufacturing overhead can be materials. It's just real junky small materials like screws and bolts. But anyway, mainly electricity, $3. Fixed manufacturing overhead that's traceable. So it is traceable to this product. Traceable means it really is traceable to carb line, where they make the carburetors. Fixed manufacturing overhead that's allocated. We know what that means. You know what that means. That's heat, light, utilities, what do we say, depreciation on the building. Hlood. Yeah, anyway, you want to get rid of hlood. Anyway, that's almost always irrelevant because, like I said, whether you make the carburetors here, whether you buy them from somebody, you're going to have that. The only way you're going to get rid of this heat, light, utilities, and depreciation on the whole building is if you shut the whole building down, and that isn't part of the plan. In fact, that would be it has been done. I mean, General Motors and Ford have been closing down plants, but that's usually your last resort. That's usually when you're horrified that you don't have enough manufacturing left, that you have to shut down your plant. Anyway, the total cost to make this is $42, and remember they said we can buy it at $35. So let's even write that in there. Let's just say, let's put this in between here, buy. We can buy it, and we'll write it down here at 35. And we'll just double underline that. So it looks like what? $7 we're going to save. By the way, this has happened to me many times. I've been approached, especially when I worked at Caterpillar. People approach me all the time and say out in the plant, Chuck, I found somebody that'll sell us this part way cheaper. And I'd say, well, hold on, maybe it's not cheaper after all. When we do an analysis like this, it is important that we go back. We know that fixed manufacturing overhead, it's going to be irrelevant, but it does say, look down here, make sure you see this. It says it's got an asterisk. And where's the asterisk at? It's right here. I don't know if you can see it, but the asterisk is right there next to the 6. And it refers you down here. It says 1/3 of the supervisory salaries are 1/3 supervisory salaries. What's that mean? 1/3 of this is supervisory salaries. Let's write that off to the side. 1/3 is supervisory salaries. 2/3 are depreciation. I'm having troubles writing here. 2/3 of this is depreciation on special equipment. And there's no resale value. Well, once again, to make a carburetor, let's again say to make the little bowls, that again they have a machine that's a press. And the press just goes down and punches in a die and basically stamps out a bowl. And again, that machine, they don't need that in anywhere else in the plant. They don't need something to stamp out a little bowl. That's actually very rational. That's a very specific machine. And again, if they don't make the carb, they don't need, again, the press that presses out the little bowl. The bowl starts as a little flat plate. And then they put it in a die, and they come down with a press, and then put it into a little, bend it into a little bowl. Anyway, so let's take a look at this. And this is where I wrote, that means that if 1/3 of the 6, 1/3 of 6 is 2, and 2/3 of the 6 is 4. And what did they say about this? So the 6 is broken into a 2 and a 4, and they say 1/3 of it is supervisory salaries. Let's put an SS there. Those are very bad people in the German army. Then the 4, what is it? It's the special, 2/3 of depreciation of special equipment. So this is DEPR. And what do we say? Supervisory, let's put a salaries on it. So it doesn't really look like us. All right, now, before we go any further, well, let's look what they want to ask us. Assuming the company has no alternative use for the facilities, that they're now being used to produce. So let's say it takes up 100 square feet to make these, or maybe 1,000 square feet to make these carburetors. And they have no use for that. What it means is it's just going to become dormant. You're just going to walk into the plant and that area will be dormant. It might have a few old machines there from making the carbs, but nobody will be doing anything there. It says, assuming that again, the facilities that are now being used to produce those carbs assuming that the company has no alternative use for that area, what would be the financial advantage or disadvantage of buying the 15,000 carbs? Well, first of all, let's just go back and say, immediately you might think, well, you're going to be 15,000, just take down $7 and you got the answer. But hold it, there's some irrelevant cost there. Let's try and go back and do this. Let's try and again find the irrelevant cost. Now think about this. We can make it, we can make it, and this is our cost to make it, or we can buy it. We know this is relevant because can you see the cash moving out the door, 35 bucks? If you go and you buy it, you're not going to spend $14 in materials. Do you see that? If you buy it, you're not going to spend $10. You're going to lay these men and women off. You're not going to buy this material. If you buy it, you're not going to have to spend the money on that electricity. Those machines won't run. If you buy it, guess what? If you buy it, the supervisory salaries of $2, you'll get rid of them. You'll lay that man or woman off. Because there again, you're not going to need them, so you can get rid of them. But look at this, the $4 of depreciation that's in there, you can't get rid of that. Remember they said it was $4 on the machine that again forms the bulb, but you don't have any other use for that bulb, for that press. That press is just going to sit out in that plant. So, looking at that, the $4 won't disappear, so what should we do with the $4? We should say, let me get a different color. The $4 is irrelevant. Always go back, if you can take the cost you got, just cross out the ones that are irrelevant. What about the $9? If you buy the new carb, you'll still have to spend the $9. So cross it out. Now let's redo what a carb really costs us to make. It costs us $14 in material, $10 in labor. We'll have to use the electricity. We have to pay the supervisor the $2, but we don't have to pay any more. So it's 14 and 10 is 24, 25, 26, 27, 28, 29. This is $29 to make a carb. It really costs us $29 to make a carb. All right, now let's look at this. If we go buy that carb, we'll spend $35 on something that we would have spent $29 on. So it says, assuming the company has no alternative use for the facilities that are now being used to produce, what is the advantage or disadvantage of buying those carbs? Well, let's write that down. And we'll say the financial disadvantage of purchasing the 15,000 carburetors. I'm not sure how to spell carburetors. C-A-R-B-U-R. C-A-R-B-U-R. E-T-O-R-S. I should know how to spell them. I've worked on a lot of them. For 15,000 carburetors, the financial disadvantage as a person is, and let me put a colon here, 15,000 times, what did we say? The 35 is what we'll pay, but 29 is our current cost. And that will equal, what is that, $6 a piece? 6 times, that'll be $90,000. The financial disadvantages of purchasing 15 carburetors is $90,000. That is the disadvantage. And we can put a period after that. I know I can't fit it all together. Isn't that what they asked for? The advantage or disadvantage? Hang on, I think my camera might have clicked off. No, it's okay. Let's do this another way. Let's do this another way, just to tie in with answer 1. Let me show you another one. All right? If you buy the carburetor, let's look at again, let's put in this column the change. Let's put in change. If you buy it, guess what you're going to do with the 14? You're going to save that money. That's a cost. You're not going to spend that. You see, if you buy it, you'll save that. You won't have to buy that. If you buy the carburetor, you can lay these people off. So you can save that. That's savings, you see. If you buy the carburetor, you can get rid of the electricity. You'll save that. If you buy the carburetor, you can what? Let me think what was in here. The $2 and the $4, and we said the fixed manufacturer, the man or woman, the supervisor, you can lay them off. You can lay that man or woman off, and you'll save $2. But you remember the 4? The 4 or the 6? 4 or the 6 you can't get rid of because it was that press. Remember, it was a piece of machinery that pressed out that bowl. Can't get rid of that. The 9, you can't get rid of that. What I'm saying here is, again, the 9 will be the 9. So it's not, I'm saying, what's the change? This will change, this will change, this will change. You'll save $2. You'll save 14, you'll save 10, you'll save 3, you'll save 2. That's not going to be a change, neither will the other one. What will be our change? 14, 10, 3. By the way, I did forget to do one thing here. Let me do this a little bit differently. $35 is what we'll spend. We will spend $35, but this is all the money we save. See the negative? I got to spend $35. If I spend $35, that's a change, and these are all the things I'm going to spend. Well, what's this? That's 24, 25, 26, 27, 28, 29, 29. Again, from 35 is 6. It still comes out that we will lose $6 every time we buy a car. We'll save 29, but we'll spend 35. So every time we buy a car, we'll lose 6. And that is what we have right over here. $6 is what we lose. All right, let's take a look at what they want for number 2. Should the outside supplier's offer be accepted? Well, let's go ahead and write an answer to that. And don't say no. Go ahead and write out a full sentence and just say, the outside offer to purchase 15,000 carburetors should be rejected. You can say something more polite, should be, again, passed or not accepted, I don't know. The outside offer to purchase 15,000 carburetors should be rejected. Should the outside offers be accepted? Suppose that if the carburetors, here's another one, suppose that if the carburetors were purchased, Troy Engines Limited could use the freed capacity is what that says. The freed capacity. I'll have to read this one to you. Suppose that if the carburetors were purchased, Troy Engines could use the free capacity to make something else. And I do have to read this one. Let me see. Yeah, I don't want to push the book down. They say that they can make it. They can use the freed up, they're giving us a hypothetical in part 3 saying, do you remember I told you if they go ahead and buy it, they're going to lose this money. They're going to lose $90,000 if they buy. But they're proposing in part 3 that, again, they'll free up some capacity. Remember out in the plant, they're not going to have the area to make. Again, in 3, they're going to free up 1,000 square feet out in the plant. They say that they can go ahead and they're going to make fuel injectors. I'm making that part up. It just says they're going to make something else. They don't tell us what. But they're going to make fuel injectors, and they say that they can actually make $150,000, and I think this is a year, making fuel injectors. And they say, well, what if, and by the way, that's an opportunity cost, you see? They're saying, now they haven't really made that yet. And that should make you a little bit wary. You should be a little bit skeptical, because remember, these are pretty hard and fast numbers. And they're saying, but hold it, maybe we can make, again, a carburetor is kind of like a fuel injector. We could go out and make fuel injectors, and we could sell those. Those are, again, fuel injectors are much more popular than carburetors. In fact, I think in about 5 or 10 years, carburetors may not exist. But there's still a lot of them right now. But anyway, they're going to make fuel injectors with that freed up space, and they can make $150,000. they say again, what is the financial advantage or disadvantage now, if that's the case? If they have an opportunity that they can use that capacity to make fuel injectors, and they can make $150,000 segment margin on that. Well, let's just do 3. 3 shouldn't be too bad. Again, here's what we're going to say is, again, if we, again, do you guys see, to do that, to again get that capacity, we gotta buy. I mean, to get that free capacity, we gotta buy. So we already know this. Again, cost to buy carbs. And that's going to be, we already know we're going to lose 90,000. And really, I should say, I should put the word incremental. This is the incremental cost to buy the carbs, 90,000. We'll have to spend that extra. But now they're posing this idea that we can go ahead and make injectors. So we'll say, but if we lose the 90, we can also sell injectors. And they said in the book, they give us that we can sell for $150,000. Well, again, now $150,000. Again, this is all one plan. If we buy the carbs, we now can sell the injectors in their old space. So now we would say that again, there's a financial advantage. This is again the financial advantage. And this is going to be what? $60,000. This is the financial advantage to purchase the carbs. Carbs is short for carburetors, okay, just in case you know. We'll have a $60,000 because, once again, we'll lose 90, but with the freed up space, we will again be able to make injectors, and we'll turn a segment margin of 150. Turn means we'll produce a segment margin. That will offset that. We will be able to $60,000 better off. But always you should again have some skepticism because nobody's making injectors yet, and it may be that you really can't make. We do know one thing. This for sure is the cost to make it. This is the cost to buy it. These are very firm numbers. But somebody comes up and says, oh, I'm sure we can make this. You always got to think if you're, making money is much harder. It's more competitive than you think. So maybe we could make 150, maybe not. So be a little skeptical on that. And then 4, they ask the same question. I'll read it to you. But again, it says, again, should they accept the offer, I think. Should the outside supplier's offer be accepted? Now, let's go ahead and write that. Should the outside suppliers be offered, based again, these two are based on the same information. Should we now, if we can go ahead and make injectors with that freed up capacity, should we accept the offer? And I would say, again, how about this? The outside, let's start it the same way. The outside offer to purchase. Do you see how I'm trying to make it clear to my boss, if I'm talking to my boss? What if I just said the offer should be accepted? Don't do that. Your boss might have 10 offers that he might be overseeing, or she. And she might say, I don't even know what offer you're talking about. So make sure you make a good answer. The outside offer to purchase 15,000 carbs, and you should even put the name of the company. To purchase 15,000 carbs should be accepted. I'd say you should go on and say something should be accepted because the company will make $60,000 more. So part 4, the outside offer to purchase the 15,000 carbs should be accepted because the company will make $60,000 more. That's a good answer. And like I said, whenever you're writing anything to anybody in a company, try to remember that, again, they might not have any idea what you're talking about. So make it, again, don't say yes or no in a memo. Try and say the carburetor offer or the 15,000 carburetor offer. Give them some details. Okay, I believe that's everything on 12.3. Now we move on to 12.4 with another, again, application of relevant costing to decision making.